What's going on, everybody? Dave Patterson here, your Toronto real estate advisor. I hope everybody watching is doing their best to stay happy, healthy, and sane during these uncertain times. I just wanted to make this quick video to discuss some of the, mortgage deferral options that have been circulating and view the best case and worst case scenarios given what's being said out there. So I wanted to discuss what the banks, credit unions, and lenders are doing with these deferral programs and kind of what that math looks like for you as the consumer after deferring it for 6 months. After looking into this mortgage payment deferral system, I've come to realize that it's not the best, especially for the consumer or the mortgagor, and I'll explain why. In this scenario, you're going to want to beg, borrow, or do whatever you have to do to keep yourself from going into this position and having to use this deferral option. However, if you do go this route, here's the worst case scenario of what you can expect. At the end of the mortgage period, your normal payments will resume, plus the interest accrued on the mortgage while the payments were deferred. Now, that accrued interest must be paid back in equal installments determined as the total accrued interest divided by the months of the deferral. So that means 6 months period of zero payments will be followed by a period of 6 months paying over 150% of the regular mortgage payments. So let's take a look at these numbers. For simplification, I'm going to be using a mortgage of $100,000, and I know many of us in Toronto have mortgages that are much greater than that, but just for simplicity's sake, we're going to use a mortgage of $100,000. So if we're looking at a mortgage of $100,000 at a rate of 3.5% on a 25-year amortization, simplifying these results in a monthly mortgage payment of $500, of which the interest is $300. So a deferral of 6 months results in an interest accrual of $300 times 6, which gives you $1,800. When the mortgage payments resume after 6 months of deferral, the next 6 mortgage payments are the normal $500 plus the payback installment of $300 for a total of $800. Now that's a 60% jump, which will end up costing you a ton. So if the interest and the principal are being added to the balance of the mortgage, you end up with a bigger mortgage, paying interest on interest, and a higher monthly payment forever. Let that sink in. Now let's take a look at the best case scenario. So best case scenario is the deferral payments are collected at the end of the term and increase your amortization. So 3.5% on that $1,800 over 25 years at the end of the mortgage term. That's best case. So you're still gonna have to pay some extra and still pay that money back when all is said and done. So the moral of the story here is if you're in a jam and can't make your mortgage payments, then borrow the short term from anywhere and keep paying it. Taking a short-term loan will benefit you in the long run. Do not miss a payment and then try to figure it out after the fact, because that's just not gonna go over well with you or your lender. Now, this best case scenario could be used advantageously. If nothing else, you could use this money to pay off some of your larger interest debt loads. Now, this is the best case scenario, and if lenders are just capping the interest onto your mortgage, it's a minimal amount to pay over the life of the mortgage. And for those landlords out there or investors who do own multiple income properties, there is an option for you as well. Some lenders are offering deferral options on up to 3 of your income properties. I'm sure as time unfolds, more options will be available, but that's how it stands currently. I encourage you to do your own research, of course, and please call your lender or mortgage specialist well before you discuss your options, as everyone's arrangements will be on a case-by-case basis.
And if you're lucky, your lender will suspend payments instead of deferring them. Make sure to ask them these questions. First of all, do you report this to the credit bureau, and will these be considered missed payments? Secondly, will the process have a negative impact on my future mortgage applications? Get these answers in writing if you can. If you need a contact in the industry, please don't hesitate to reach out and ask me any questions that you may have, as I've got plenty of contacts I can put you in touch with. And as you know, I'm always here as your resource for anything real estate related during these uncertain times. Thanks again, guys. Stay happy, stay healthy. Talk to you soon.